Parse through the most crucial moments of the trading day. I'd argue that the most crucial moment came at 8:30 a.m. before the stock market opened.
You're spot on. I just keep pulling up my rate charts on the Bloomberg because it's just amazing what we've seen in the U.S. Treasury curve. To see that 2-year now at, 3.9, just below 4%. Same thing for the 10-year. So just phenomenal, the moves. But as we talked with our Michael McKenzie of Bloomberg, who follows rates, he's watching CPI. Keep in mind, we've seen this before where rates move up, markets react, expectations on Fed rate cuts, are reduced, but it can change on a data point.
I guess the question I have is there concern now about inflation again with a print like this? Austin Goolsbee at the Chicago Fed says don't look too much into one report, but what happens if the labor market is too strong and the Fed already cut by 50 basis points?
Yeah, that's for sure. And we're going to get some more hint about how that is going next week when we get the CPI, of course, Tim. Mm-hmm. But I'm finding it interesting that we're actually picking up steam as we go into the close, right? We're really close to our highs of the session with the S&P up 0.9% now, and those huge moves in treasuries as well.
We're going to see how everything resets next week with the CPI report and also the Fed minutes, which at this point feel kind of obsolete given the data points that we've gotten.
Very true, although you never know what you're going to glean from these minutes, right? Or who was the dissenter, or who was the person who took down their forecast.
Especially as there's some second guessing of that 50 basis point rate cut now. All right, let's take a look at how things are shaping up. As Vonnie mentioned, we are closing near our session highs. The S&P 500 up 0.9% right now. The Dow Industrials gaining 0.8% to 42,344. The Nasdaq, the winner of the bunch here, gaining 1.2%, but actually, take a look at the small caps. They're so much more levered to the economy, and as a result, the Russell 2000 gaining 1.5% on the day.
Good news is good news today in terms of the equity trade, especially for those small caps. Having said that, your best performer in the S&P 500 for the week overall, guys, Vistra Corporation at the bottom of the pack, Humana. We know the news. We covered it, down about 25%. And Scarlett, if I look at the S&P 500, most names in the S&P are higher, about 357, 146 to the downside.
All right, let's take a look at the IMAP, which shows the S&P 500 has broken down into 11 main sectors. A lot of green on that screen. It's like a spinach pie this time. There's a small slice of tomatoes.
Taken away.
Yes, that's right. Your laggards are real estate investment trusts and utilities, but they're down by less than 0.7%. And utilities, you can argue, barely lower. Financials are the best performers, gaining 1.6%. And it's not just among the big caps, it's across the board in small caps as well. Consumer discretionary and communication services also gaining more than 1%.
I'm so disappointed. It's a brat pie today.
Oh, okay. That's right. It's a brat pie. Yes.
The green.
Yeah. Oh, I know.
Come on, get with it, Tim.
Oh, spinach pie, brat pie.
A lime pie.
Yeah.
All right, let's get to some of the individual gainers. Hey guys, in homage to the bank earnings next week, Morgan Stanley on my radar up more than 3% in today's session, upgraded to buy from hold at HSBC, which says the stock's long period of underperformance versus peer Goldman Sachs and the broader market could be ending. Morgan Stanley will report earnings on October 16th. Stock's up about 15% so far here in 2024. All right, U.S. dock workers agreeing to extend their union contract until January 15th. I know you guys have been covering it. We have too. They are keeping negotiating in terms of the next new contract. Having said that, there were some companies, you might recall, on October 1st, B of A came out and said consumer companies, staple companies like Dole and Pilgrim's Pride could be hurt as a result of a prolonged strike. So with the strike over, I took a look at Dole. That one is up about 4.5%. Of course, our bananas, can I say that, are safe. So that's up about 4.5%. Pilgrim's Pride, which is all things chicken, that one is up about 2.4%. Here's a banana. I always have a banana in the studio.
She's ready with her props.
I eat it after we have the simulcast.
You need those for press conferences.
Right? Potassium. It's really good. All right. And one more. I'm going to go there. Scarlett, I'm going to go there.
Oh, there we go. Golden Dragon Index.
There we go. Up another 3% in today's session, up more than 10% so far this week. It's up nearly 50% since late August on that wave of stimulus rounds that have included interest rate cuts, also funds to buy stocks. It is still down, though, more than 60% from a high back in 2021. But again, those Chinese names that trade in the U.S., definitely a bullish trade this week.
Okay, let's get to some of the notable decliners. I do want to start with Rivian. I kind of have like a little travel dining theme here, down 3.15%. Shares fell after the company cut its annual production target. Rivian cited a worsening supply crunch at its U.S. assembly plant. The company now expects production to drop as much as 8 18% this year due to an ongoing shortage of this component used to make its electric pickups and SUVs, as well as commercial vans. We're talking about the R1 and RCV platforms, a component that goes on that. Third quarter output and deliveries both came up short of analyst estimates. Shares were down as much as 9% earlier in the session, but did pair some of those losses. Speaking of pairing losses, Spirit shares were down as much as 38% earlier in the session, ended up losing only a quarter of their value just today, down 90% so far this year, guys. It did hit a record intraday low. The efforts to restructure its debt and avoid filing for bankruptcy have hit a snag. This after months of talk with bondholders failed to result in a deal. This according to a Bloomberg News report citing people familiar with knowledge of the matter. Separately, the Wall Street Journal did report that Spirit and bondholders have held discussions over the terms of a potential bankruptcy filing. And finally, Dine Brands Global, the parent company of IHOP, Applebee's, and Fuzzy's Taco Shop, which I've never been to, but I've been to the others, I guess. They were downgraded to hold from buy at Truist Securities, cited customer concerns about sales trends at the company. Shares falling today by 2.4%.
Wouldn't be my first choice of name for a taco place, Fuzzy's Taco. Would you really want
Yeah,
a
no,
Fuzzy Taco?
that's not a good image.
Although it does sound very comfortable. Tell you what wasn't comfortable today, and that was Treasuries trading. I got so used to saying 3.6 something when it comes to the 2-year yield. Suddenly, I'm back at 3.9217%. That was a 21.5 basis point move just today alone. Of course, it was after the jobs data, and we might have anticipated a move like this. But wow, what a stunning move. I mean, you've got to have a really strong stomach to be a fixed income trader these days. Remember when the curve just inverted? Well, that definitely isn't happening again, at least for the moment. The 10-year yield, very, very close now to 4%, and of course the 3-month T-bill 4.62%. So a really stunning move there. Pricing out Fed cuts, as Michael McKee was saying earlier, we were looking at more than 10 cuts until the end of 2025. That's now down to about 6.5 cuts.
Are you guys ready for earnings? I mean, next Friday marks the start of earnings season once again.
JP Morgan, Wells Fargo, BlackRock, all next week.
Bring it
We got
on.
Delta Airlines, we got Airbnb, Booking Holdings, Pepsi. We got a lot coming next week.
I like the ones that are post the bell because I like watching you guys.
We like doing them. Yeah, but it'll be interesting, right? We'll start to get some commentary that we can layer on all of this economic news. We get a CPI number also, which, as our Michael McKenzie said, that is something that could change, once again, the rates narrative. He said we've been here before. He said, though, that we could see that 10-year back above 4%. So that is something it'll keep us a little bit busy.
There's some Treasury auctions next week as well that'll make it really interesting to see how Treasuries move.
All right. A lot of stuff to keep us busy. All right, guys, that's a wrap. Our cross-platform coverage. Have a good and safe weekend. Our cross-platform on radio, TV, YouTube, and Bloomberg Originals. Folks, we will see you again, same time, same place on Monday.